Hi, everyone. Thanks for attending. I'm going to talk about my favorite indicators. I have several that are my favorites, but the on top is what I consider to be my essential indicator, and it's SunnyBands. So we're going to talk about trading with SunnyBands today, and I'll show you some of my other indicators while I'm working on it. But my passion is in helping beginners. I love to help people who are just getting started or who have been trading for a couple of years, but they're not profitable yet. Uh, I hear a lot of that when people call me. And I like to trade, I like to teach intermediate traders. So people have been trading for a few years and just aren't quite making it. So this talk is for traders who have not yet become wildly successful. And by that, I mean, well, for instance, I'm up 109% for the year so far in my live trading room. That's pretty wildly successful. Last year, we were up 482%. That's wildly successful. And I like to help people who have not traded much and want to learn, and people who want to improve their trading results. So if any of these apply to you, give me a call. You can see my phone number at the bottom of each slide. And I answer my own phone. You don't get a salesperson, you just get me. I love to teach and mentor and consult with people. And I do that. Give me a call if you're interested. There's the phone number. That's my cell phone, so I answer it myself. And the disclaimer is investing and trading can and will produce losses. You have to be very careful to only trade with money you can afford to lose. Past performance is not a predictor of future results, and all investing involves risk of loss, and individual investments may vary. When your capital is at risk when you invest. You can lose some or all of your money. So never risk more than you can afford to lose. There are always losses. Even the best traders have losses. And this presentation is going to be on my website, moneymentor.com, and you'll be able to click and see the full disclosures and details on that.
Hey, Sonny,
Yeah.
there's a lot of noise in the background. Are you
Oh,
are you
oh,
able
oh,
to turn
oh.
that off?
That's my Bean Ticks indicator. Thank you.
Okay.
Yeah, I use that indicator to tell me which way the market's going and how fast. So it plays a little sound file with each tick of the market.
Okay. Yeah, that was a lot.
Makes a lot of noise.
Yeah,
Sorry about that.
no problem.
So if I could give you one piece of advice, I would discourage you from trading. It can be very disappointing, especially if you're going into it because you want to make a little extra money for the family. That's a hard place to go. I'm going to tell you how I create a strategy. I'll tell you how I analyze charts. I'll tell you how to design and test a strategy and how to optimize. No, these things are not in this one. That's a that's a bad slide. I've been trading for 44 years now. I started in 1981. I trade futures, stocks, gold, and crypto, but I don't trade options. I don't know how. What I do know how to do with options is lose money. And since I don't like to do that, I don't trade options. I'm going to tell you a little bit about myself and show you how I trade. So I've been a professional trader for 44 years since 1981 through the 41% crash of 87, 38% crash of 2000, 52% crash of 2007 to 2008, as well as the 38% COVID crash. So when you have a lot of experience trading crashes, you look forward to them. And the coming one, will it be soon? I don't know. But we will have one just because we continue to do that. So I primarily trade the S&P 500 futures contract on 1 and 5 minute charts. I take all my trading signals from the 5 minute chart. I've heard people say it's the most difficult to trade, but I think the NQ is harder to trade. And I've been doing it for 44 years. And I do have long-term stock holdings. For instance, right now I have NVIDIA and Palantir and Dell and Google. And a week or more to me is long term. When you trade on a 5 minute chart, then a daily chart's a long term. You can sign up for one free live trading session with me or text me TAWS1 to my cell phone. If you text me that, I'll send you the link for next Wednesday. And I explain what my indicators are telling me and what I'm looking at and tell you what I'm thinking and watching. If you can't find the free live trading session, then just email me and tell me you want it, and I'll give it to you. I will be posting a PDF of this talk on MoneyMentor.com under appearances for members. Membership is free. All you have to do is fill out a form, and then you get access to the members only page in Money Mentor. I also do a free podcast. I've interviewed Michael Filigera and 54 other people, all of them famous traders. And it's fun to listen to them talk about their lives and how they got into trading. I have a Substack. Where's the Dow going from here? Every night I post a chart of the Dow and talk about where I see it going with SunnyBands. I also have, I just told you about that. That's the free podcast. Larry Williams, Jake Bernstein, Steve Nissen, Linda Raschke, Alex Elder, Cynthia Kay, Sherman McClellan, Carolyn Baroden, Greg Morris, John Bollinger, and 44 more people. This is my website. I'm in the process of completely redoing it. So if you don't see this a few weeks from now, you'll know why. It's because I'm putting up a new one. I was rated number one trader twice. First year with 365%, second year with 178% profit. And I was using SunnyBands and my dynamic moving average, which I'll tell you all about. So you can see right there at the top highlighted, that's where I was. Trade along with Sunny, TAWS. I have the daily live trading room from 7:30 to 8:30 every morning Pacific time. And it's for 1 hour. And last year up 482, up 106 so far. I'm up more than that now. And do you know any other traders that are up this much? Ask yourself that. I grew up dirt poor in Appalachia. I got 3 degrees in mathematics and 1 in telecommunications after I retired at 30. And I've had business and programming classes at Stanford, Wharton, UCLA, San Diego State. Where else? Lots of places. I've been programming for 56 years, trading for 44 years. I was initially a systems programmer for Lockheed up in Sunnyvale. And I helped found a little company called ISCO, which became the world's leader in computer graphics software, from which was derived Harvard Graphics. And when I was 30 years old, I decided to retire. I traveled the world, raised my kids, learned to trade. But at the beginning, I gave my money to money managers. And in 3 weeks, they lost $75,000. And I thought, well, I can do that poorly on my own. So I took it over. I started out reading and reading and reading. And on my Money Mentor site, under books, go to books. There's a beginner's reading list, an intermediate reading list, and a comprehensive reading list. So I've read 747 trading books so far. But the first year I watched and learned before I entered my first trade. And I would highly recommend that. You learn the rhythm that way. And for 8 years, I published a monthly magazine called Traders Catalog and Resource Guide. And that's how I met all these famous traders. I've written 6 best-selling trading books. Trading 101, Trading 102, Electronic Day Trading 101, getting started in trading, TradeStation Made Easy, and then I wrote Going Vegan with Linda Blair, the actress, and then Using Easy Language 9.x with Murray Ruggiero. And last year, I finished the definitive guide to TradeStation's easy language and OEL programming with my friend Sam Tennis. And of course, I've written articles for all the main magazines. And here are the covers of my books so you can recognize them when you see them. There's the magazine. There's Going Vegan with Linda Blair. And here's the latest one. It's a 2-volume set. It's 1,300 pages total, but it's everything you need to know to program with TradeStation's easy language and their object-oriented easy language. I've been rated in the top 10 consultants and courses and seminars, rated #1 by Stark Research, and I've belonged to all the major societies. Here's go to Quips on my website, and you'll see what people say. That it's all unsolicited. Yesterday, this guy says to me, "It's cool as hell watching you trade. Your style is simple and you're so calm. It's a beautiful thing. I can tell you're really comfortable with TradeStation." So I thought that was pretty fun. But go there and you can see what all kinds of people say. I even put the bad ones on there. This one, a guy wrote to me. I have no idea who he is. I just want to say I love them, your bands. I've torn apart Bollinger Bands, Keltner, etc., and nothing comes close to what you've created. I've talked to CMTs who've said, oh, yeah, they're just bullies. And I almost spit out my coffee. I've watched your videos where you're walking a new customer through their use, and I got it. The turns are right there. Bullies are too general, and Keltner, which Rasky says she likes, are only a hair better than bullies. Yours blows them both away. Of course, you already know this. I do have a Facebook page. I try to post every day. I don't quite manage it, but I post regularly. If you go to this is old. If you go to Facebook and look for Sunny Harris, you'll see where I post my free market predictions as I see them. Actually, now I'm posting them all to Substack, and the PDF will be available today sometime. So where's the Dow going for now? Subscription is free, and I would love to have more subscribers. I'm just barely started. I've been doing it for a couple weeks, and I would love more subscribers. I have clients all over the world, so don't be afraid to call me if you're in Abu Dhabi. Yeah, United Arab Emirates. So now we're going to talk about one of the most important things in trading. How do you make a 6-figure income? These are the most important slides in the whole presentation. If you do this for yourself with your own goals in mind, and you'll see how important it is. Without a goal and a plan, you won't get to your destination. A strategy is a map. It's a recipe. It's a set of rules that tell you what to do next. There's an old joke that goes, do you know how to make $1 million in the stock market? The answer is start with 2 million. And it's not so far off. That happens. I have a client who called me up and said she had made lots of $1.2 million in the market the year before, but this year she'd already lost $1.4 million. So I hope she's not still doing that, but it's not uncommon. It's very common. I hear that kind of thing all the time. Trading is a very difficult proposition. Most people lose money doing it. Very, very few traders are successful, and even fewer are successful year after year. It's rare. So again, only trade with money you can afford to lose. So here's how to make a 6-figure income. Let's say $120,000 a year. That's 6 numbers. Divided by 12 months, we get 10,000 a month. 10,000 a month divided by 20 trading days is $500 a day. Now it seems more achievable. 5 trades of $100 each. That's all it is. So if you can just make 5 $100 trades, you'll be making 6 figures a year. And with the S&P, there's typically between $1,000 and $3,500 potential if you go long and short one contract. Once you figure out how to make it, 5 trades of $100 each, do what it takes. Stay up late, get up early, sit and watch the monitor, stay away from the news and read your charts. I've had a lot of people say, I want to be a trader, but I don't want to sit in front of the computer. Well, you don't want to be a trader very bad then. And I've had people say, well, I want to just trade 1 hour a day. Now, in the live trading room, that's where I made the 482% last year. It's only 1 hour a day. I trade from 7:30 to 8:30 a.m. Pacific time. And we made that profit. Imagine if I'd been doing it all day, what that would have been. So I say, let's dance with the market. Sometimes there are only 3 moves in a day, sometimes only 1 if it's trending. So don't try to take something that's not there. Don't try to trade just for the sake of trading. Sit and watch it and figure out where it's going and then go with that. Keep a chart of your income and draw a goal line on it, trend line. So it's just linear regression style. And you'll be surprised how that gets your goals solidified so you can trade to that line, make it a 45% line and 45-degree line and track it every single day. Always focus on the present. So you have to dance with the market. There's only 3 moves. In some days there's 5 moves, some days there's 1. So let's create a strategy, test a strategy. We're either going to do it by hand or by writing code, prove the strategy, and call me if you don't know how to do this. I'd be happy to help you for free. That's what my 482% year looked like. Now see this dotted line, this trend line that goes through all this? That was my goal for the year. And we made it. I'm going to show you the steps to designing and testing your very own strategy. So what is a system or a strategy? It's rules, it's a map, it's a guideline, a recipe, a strategy. Takes the emotion out of trading, which is very important. I mean, there's a lot of books on trading psychology. Basically, they tell you to take the emotion out of the trading. I used to teach live seminars, and one of the things I would do to get them to write their rules down was to say, write me a recipe. And I had a jar of peanut butter, a jar of jelly, a knife, a spoon, and a loaf of bread. I said, using these things, write me a recipe, be specific. Well, an awful lot of them came back, open peanut butter spread on bread. Well, is that a good system? What about putting the spoon in the peanut butter and taking the spoon out with peanut butter on it and then spreading it on the bread? Some people didn't even say open the peanut butter jar. So you have to be specific and think of the peanut butter sandwich every time you're trying to specify your rules. While speed and instinct often steal the spotlight in real-time trading, a well-built system is the true foundation of consistency under pressure. If you trade in simulation mode, you'll get used to the market. Hang on, somebody's probably calling because I gave my number out. If you trade in sim mode, you'll feel the pressure because you want to make money, but you also won't feel the pressure because you say, oh, it's only fake money. Don't do that. Trade as if it's really real money. And then when you get real money on your system and you're really trading under pressure, it's a lot harder to lose real money than it is to lose fake money. Behind every fast execution is a strategy that's been rigorously tested, fine-tuned, and trusted to perform, especially when the markets move fast. You got to have a strategy. As far as the system's concerned for this presentation, works means makes a profit. So if I say to something work, you know I'm asking whether it makes money or not. It could simply mean that the system places buy and sell arrows on a chart and not address the profitable part. It's a valid definition for works, but not for use in this presentation. I always use works to signify a profitable system. Okay, so we're going to look at a few charts here to see if they are trading candidates and how much money is on the chart. That's one of the things you definitely want to know is how much is possible. But what would your hourly wage be? If you can't make more per hour than working at McDonald's, then let me tell you, you should be working at McDonald's. Is it worth trading? That's another question that I ask myself about every stock chart that I look at. It's physically and emotionally impossible to catch all the highs and lows. It just doesn't happen. People try to catch the turning points, and it's very difficult to do. If someone tells you they can do it, run for the hills because they're probably lying. Best you can do in the market is like the best you can do in golf. Sure, you might make a hole in one once or even twice in a lifetime, but usually not more than that. And most people never make a hole in one. But the golf pros still make a good living at playing golf. And if you set your sights right, you too can make a good living at trading. There's no such thing as presence when it comes to the market. We all look at the hard right edge of a forming chart. We don't have future data. There's no way to know where the market is going beforehand. There are no future predicting indicators other than Fibonacci and Elliott wave, which you just heard Michael talk about. So we're going to ask what is true all the time, over and over. What is true? With every new bar on the chart, what is true? So plan ahead. Without a plan, you won't get there. First, you must have a system. And even if it's just your recipe written down on a piece of paper, you must have it. And you must do what it says every single time. Otherwise, you're just guessing. If you want to make $1 million in a year, you need to break this down into achievable milestones. To make sense of just how much money $1 million is, let's divide it by 12. So $1 million divided by 12 is 83,000 per month. Now, how much is that per week? Gina? We're going to break it down a little further. How much is it per week? Let's divide by 4.33 weeks in a month, and we get 19,000 per week. How about days? Let's divide by 5 days in a week, and we get 3,849 per day. It's hard, but that's doable. It's really difficult to make that kind of money. Michael said, if you make $1,500 in a day, that's a good day, and that's true. So if we made $1,500 a day, that would be $500,000. And that makes down to earth sense. To make $1 million a year, we must make 3,800 per day, every day. That's a lot of pressure, but you can do it. If you don't think you can make $1 million a year, then do the same process with 50,000 per year. It's still a great achievement. I'm going to leave these calculations to you, but you see how I do it. And it's a very important exercise. So set down what your goal is, divide it by 12, divide that by 4.33, and that by 5, and you've got your answer. And if you want to, you can email me your daily numbers to tell me how you're trading, and I'll see what I can do to help you. Okay, let's find a chart. We're going to yellow highlight all the significant turning points on the chart. Notate each with the price at that level and subtract the numbers, each short and long. Total up the ideal profits, or you can do it automatically using one of my other favorite indicators called potential hourly wage, or PHW. So if I look at a chart and I see the PHW is less than $50 an hour, then I don't want to trade it. The goal is to make more than the minimum wage. So $500 trade is 6.5 hours in a market day is $77 per hour. Now we're talking. So the yellow dots are PHW, potential hourly wage. And it lets you know if you can make more money by trading than you can by working for an hourly wage. So, and these dots are at the ideal turning points. There's no way you're going to catch every yellow dot every time. We can't be perfect. So I take 60% of the ideal as a goal. So I figure I can leave 20% on the entry, 20% off on the exit, and therefore capture 60% of it. I'll show you how that works. Now I'm going to tell you a little bit about optimization. This is finding the profitable input values. So you test every combination of variables from some number to some other number, 8 to 9 to 10 to 21, let's say. And then in combination with this would be the 8 to 9 to 10 would be the fast length, and 15 to 16 to 17 up to 55 would be the slow length. Now, I'm just putting numbers in. These aren't the key numbers, but this is how to optimize one data point at a time. So that's a lot of tests. It's 574 actually. Here are the PHW yellow dots on the chart. So you see how they come on at the perfect turning points over and over and over again. And again, you can only catch 60% of that. So out at the right, you see some words. Ideal equals $99,000. 60% of that's the PHW, 9,500. Ideal number of trades was 29. And the date span on this was 5/15/23 to 5/13/2025. So we got 3 years, and it makes, when I say $59,000, that's excellent. But what I'm proposing is that you leave the first, can you see my mouse here? Leave the first 20% alone and get in there, and then get out late by another 20%. So let's ask what is true on the same chart I just showed you, where there's moving average crossovers versus the yellow dots. I've put vertical lines on the chart to show the crossovers of the moving averages. A red vertical line is for short, a blue vertical line is for long. And I've got these two moving averages. One is 55 and the other is 21. And this is another of my favorite indicators. You see that it writes greater than, so I'll know if price is greater than or less than the moving average. And 55 is the length, slow length. And then this blue one, greater than 21. So the blue number says this is the 21 moving average. And again, here's the text that tells you how much you could make. So we're going to try 8 and 13 and see what happens. And we've got buy, sell, buy, sell, buy, sell, buy. You see how moving averages cross over too many times? That's one of the things that my SunnyBands does not do. SunnyBands does a real good job of avoiding the whipsaw. So let's test with TradeStation. Let's test our system. It can be a lot of very patient work if you do it by hand in a calculator, or we can write the code for easy language. This is TradeStation's easy language. And that's it. So we're selling at the fast length's 21, the slow length is 55. If the average of the close, comma 21, crosses over the average of close of slow length, which is 55, then buy the next bar. See, that's not hard. If the average of the fast length crosses under the average of the slow length, then sell short. And that's all there is to coding a system. If you don't code easy language and would like to learn, give me a call. I'll be happy to help you. I've written the top 3 books about TradeStation and easy language. So I'll be happy to give you some tips for free. Just give me a call. And this is what that strategy looks like on a chart. You can see the red sell arrows and the blue buy arrows, sell, buy, and look how late it is coming in. That's more than 20%. But this is the performance summary from TradeStation. Using those rules, we make $54,000. I think I said 3 years, right? 54 grand in 3 years is really, how many of you are making that? Very few of us do that. But you can do it. You just have to follow the rules. So if I want to know how my system compares, my strategy compares to any other strategy, I have an equation that I call cardinal profitability construct, CPC. And Kevin Davey reviewed this on his website if you're interested. He thought he was going to prove it wrong, but he ended up liking it and deciding it was a good thing. So I call it my CPC index. And here's the equation. Profit factor times percent profitable times the ratio of the average win to average loss. Percent profitable you express it as a decimal. And that in the case of that system, that result of that equation is 1.73 times 0.381 times 2.81, which comes to 1.85. Now, my rule is with the CPC index, it has to be greater than 1.2 to qualify as a tradable system. And this one is 1.85 is pretty good. And we knew that because it made $54,000. Now, here's what optimization looks like. I showed you 8 to 9 to 10, etc. This means 8, start at 8 and go to 21 in steps of 1. Again, start at 13, go to 55 in steps of 1. And then you click OK. TradeStation runs for a couple of minutes and then spits out the answer. If we optimize that same strategy using the parameters I just showed you, 21 to 55, etc., that brings the output up to $62,000. So we were at 54, now we're at 62. Where no open position. Profit factor is 2.09. That's your first clue that this is good. And total number of trades 17%, profitable is 47. Professional traders trade all the time with 40%. So it's not bad because it's only 47. People who want to trade a system that's 90% profitable are looking for trouble because that just means that it probably has very few trades and they had one big one that was successful. How does my strategy compare? Cardinal profitability constructs again, CPC index. There's the formula. In this case, it came to 2.31. That's my strategy. And that's very much greater than 1.2. So let's do it on some other symbols. And let's use, this time, let's use MACD, which is moving average convergence divergence. We've got fast length and slow length again. We're going to run an optimization, and we're going to ask what is true. Entries on crossover are calculated with fast length and the slow length. And there's the MACD at the bottom of the chart, and we're trading every crossover. So here's a buy, here's a sell, here's another buy and another sell. And you can probably see just by blurring your eyes and looking at it that it's probably not going to be very profitable. There are the trades marked. And here's the performance report. So see, you could tell by the whipsaw that we weren't going to make any money on MACD. Of course, you can go in and optimize those results and see what you come out with. But the CPC index for the MACD is 0.3. That's nothing. Doesn't even come close to 1.2. So if we ran 1,000,000 tests, we're going to set it to genetic, not a what, that automatic or something like that. And the best inputs were 3.8 times 0.5 times 1.9, which is 3.61. So you can tell that optimizing would have done a great service here. Best values were 18, 25, and 8, and then 15, 13, and 11. Now, if your fast length is 15 and your slow length is 13, you know right away something's wrong. Fast length is longer than slow length. That doesn't work. But if we use the first, oh shoot. If we use 18, 25, and 8 for the best inputs, then you can see we've got our total up to 98%, $98,000 now. And let's see, profit factor 2.21, 55% for percent profitable. And then I don't know where the other one is. It's off the screen. But that's how it works. Whipsaw is a price or indicator moving back and forth with no trend. That's what I call it. In other words, losing money on both sides of a price swing. That last chart was full of whipsaw, but we managed with the right inputs to get it to work anyway. Now, chances are, if you optimize, those same optimized results won't work in the future. So you're going to have to be, if you want to trade that MACD chart, you're going to have to be optimizing at least once a week to get the new results every time. So let's look at the crossovers, signals. During the whipsaw, you lose the profits you had on the trends. And so 39 years ago, I set out to cure whipsaw. I wanted to invent a moving average that nearly eliminates all whipsaw, and it's called my dynamic moving average, or DMA. So in my experience, whipsaw eats up all the profits you made from the trends. The signals, in this case crossovers, are late, and it's a very lagging indicator. So rather than optimizing and accepting the whipsaw, my moving average changes its input with every tick of the market. So that fast link, slow link, they change with every tick of the market as the indicator calculates its own inputs internally. And it stays out of the way of most whipsaw. In all this time, 39 years, I have not optimized it. I've not changed the inputs or reprogrammed it or changed the mathematics in any way. It's been working for 39 years now. SunnyBands indicator is an offshoot of my dynamic moving average indicator. It's designed to let me investigate the excursions from the DMA, both favorable and adverse. And the bands are average true ranges away from the dynamic moving average. They're not Bollinger Bands. He uses standard deviations away from a simple moving average. Standard deviations statistically tell the market where it should go. And the simple moving average is one with an awful lot of whipsaw in it. My DMA is smooth and it dances seamlessly with the market. I use ATRs, which ask the market where it has been and is going. I don't make statistical predictions. It's unique, and for three things. Primarily, it's unlike anybody else's moving average, although several have tried, they haven't come close. It calculates its own lengths dynamically within the mathematics. And on top of that, the market usually moves about as much as it usually moves. So that's why I use ATRs. Okay, now I'm going to give you the rules to the SunnyBands. And I'll show you a picture of the SunnyBands in a second. Let me take a drink of water. Ah. When the market is going up I call them blue candles because the SunnyBands are green. And so I don't use green candles, I use blue ones. So when the market's going up on blue candles and it gets above the upper outer sunny band and turns red and dips below the upper outer band, I go short. When the market's going down on red candles and gets below the lower outer band and turns blue and pops above the lower outer band, I go long. That's about as simple as it gets. There are some more complex rules for little special situations. And if you want to give me a call, I'll walk you through the presentation so I can show you exactly what I'm looking at. I did that this morning. I did that with a fellow. Now, looking at Amazon, the investor could have made $168 per share, while the trader made $299 per share, and the day trader made $610 a share. That's why I'm a day trader. If you started with 100 shares, the investor made 16,000, the trader made 29,000, and the day trader made 61,000. See, that makes a difference. Of course, these are all hypothetical values. So if you bought Amazon or Apple, I think this is Apple. If you had a starting value of 47 cents in 1981 and the current price was 156, then the investor made 399%, which is excellent. But the trader made 635% and the day trader made 1,200%, almost 1,300%. That's why I'm both a trader and an investor. I'm investing in stocks on a swing trade basis, and I'm day trading the E-mini. Is this possible? Well, yes and no. You can't catch all of the ideal moves. It just doesn't happen. So that's why I say 60%. You can get 60% of each move when trading, and that's what's reflected as PHW. But as an investor, you've got to sit through long periods of scary negative markets. And the trader can just go short. Here are the rules. I have a little 4-page summary called SunnyBands Rules on MoneyMentor.com. And there are only 3 sets of rules. Keep in mind that everything I say here today is for educational purposes only. And the rules are on moneymentor.com/downloads.html. Level 1 rules. I enter long when red candles have been moving downward and touch the lower outer band and then turn blue and move back inside the lower outer band. And then I add if price confirms. And by that, I mean, if you are going to go long, the next price must confirm that the market's going up. You don't want to go long when the market's moving down. I enter short when blue candles have been moving upward and touch the upper outer band and turn red and move back inside the upper outer band. Again, if price confirms. So here we've got a chart, and you can see the SunnyBands. I've got a blue band and a green band on top, and a blue band and a green band on the bottom. Lower outer, lower inner, upper outer. So you can see here we've got red candles coming down to the DMA. They bounce, come down to the lower outer band. We've got 2 blue candles. One of them was not quite over the inner band, but the second one is. And we go long. Ride it up to here. We've got a red candle that comes down from the upper inner band and goes on down. Likewise, if we've had blue candles going up, we've got a red one coming down that passes the upper inner band, and we go short. That's about as simple as that. Level 2 rules involve the DMA midline. If it's flat, that is visually sideways, I don't, quote, expect price to move very far beyond the midline. And you can see here, the midline is the little black line that's between the purple and gold lines. So purple means we're sort of all overall bearish. Gold means we're overall bullish. And the line in the center is the average of those two. So it comes up, hits the DMA, falls again, goes up again, hits the DMA, and falls again. In fact, it acts as a barrier to further movement. So I don't like to trade when the DMA is flat. And then level 3 rules say if you've got a good thing going, stick with it. So if gold is on top and you've got a positive slope, just stay long until the gold DMA is penetrated. And that's what this looks like. See, we're above the DMA, above, and now it breaks down, drops through the upper inner band, drops to the DMA. I'm out. Oh, speaking of which, don't forget that on Wednesdays you can come watch me trade live for 1 hour. Anybody that texts me TAWS, I'll be happy to give you a free pass. And one more level 3 rule. If purple is on top and we have negative slope, I stay short until the DMA is penetrated. And that's what this one looks like. See, purple's on top, all the way down. And here, price breaks the DMA and I'm out. That's how simple it is. And here's PHW on the chart with SunnyBands. And you can see we go up, we're out. Down, we're out. Up to the DMA, reverse and go down. And here's where we go long again. So we're asking what is true. Remember how close together the MACD vertical bars were? That vertical line, they were going long, short, long, short, long, short. You can see lots of space between these. You can see that it just chooses the major trends. My indicators work on any symbol, on any time frame. Yes, 5-minute, yes, 15-minute, yes, daily, etc. And any symbol. Yes, crypto, yes, stocks, yes, futures, and Forex. There's a table every month in the back of Technical Analysis of Stocks and Commodities magazine. Looks like this. And you can see that the S&P E-mini is right at the top. It has the most liquidity of any contract traded. And then we have 10-year notes and 5-year notes and T-bonds and another T-bond and 30-year T-bond, another T-note, and then we come to the NQ. This is where the NASDAQ is with respect to liquidity compared to the E-mini. That's why I trade the E-mini. It's the most liquid contract in the world. So now we're going to look at PHW a different way. We're going to put a couple symbols in the radar screen, and we'll see which one has the most potential to make profit. And therefore, which one should we trade? So here's E-mini, crude, and gold. Buy and hold numbers are BH. You can see the buy and hold per share. And we can see the PHW ideal number and the 60% number. So which one do you think I would trade? 32. 32,000 versus 1,400 versus 24,000. I'm either going to trade the ES or gold, one or the other, but probably the ES would be my first choice. Yeah, I trade the one with the most profit because there's only one reason to trade, and that's to make money. If you're doing it for any other reason, you're doing it for a bad reason. If you're trading to make spending money for your family, that's probably not going to work. If you're trading because you like the excitement, that's probably not going to work. If you enjoy stress, you'll get plenty of that, but it's probably not going to make money. So people have asked me, why do you sell your indicators? Why do you do consulting? Why do you still trade after 44 years? I've been asked many times. I trade to give back to the industry that has been so kind to me over the years. 44 years of trading is a long time. And I still enjoy doing it every single day. It's fun for me. And I still like making money. I don't want to walk away from it. The great Larry Williams has been trading since the 1960s. So he's one of the longer termers. Now, if you have a profitable series of trades, it's possible with strategic compounding to greatly magnify the profits. I call this ultimate F. It's reminiscent of Ralph Vince's optimal F, which is the optimal fraction at which to trade or which to compound your results. But mine doesn't have the enormous risk of drawdown that Ralph's does. So on January 2 of 2024, I started trading a daily live trading room called Trade Along with Sunny. Text me TAWS. And I was trading 5 contracts of the S&P. We're together for 1 hour. I trade with double the margin in my account. So if the margin for the S&P is 5,000, I trade with 10,000 for 1 contract. And here are the results. That's that again. Now let's look at it a little bit. Oh, there's the spreadsheet where I keep track of it. This is what the curve looks like. $400 a day. And now if we compound it using my alternate F spreadsheet, this blue one still stands, and the red one is the compounded value. This is just by putting your numbers in my spreadsheet, you can do way better. So we go from $50,000 profit to over $200,000 profit. Same trades, same strategy, just compounded. So Ralph told me there was an error in his equations, and I found them. And he was happy. He said he'd been looking for 2 years to find those numbers. And he said he would allow me to call my version Ultimate F, reminiscent of his Optimal F. And that's what happens if you've got degrees in mathematics. Ralph read mathematics. He was kicked out of high school in 11th grade because he was too annoying. And he went to the library and started reading mathematics. And now math than I do. This is what the Ultimate F spreadsheet looks like. You can see it says to trade 1, 1, 1, 1, 1, 1, 1, 2, 2, 2, 2, 2, 2, 2. Then it goes up to 3 and then 4. But it waits until it's the proper time to do that compounding. Here's my website again. And until July 31st, this slide won't show it, but I'm giving a 40%, up to 40% off on all my indicators. So if you want to take advantage of the best price deal this year, and I'm not going to repeat it, now's the time. With it, you get a free week subscription to the daily TAWS meetings, where we meet every day for a full week with your purchase of 1-to-1, which is SunnyBands and the DMA histogram. And this price is not right. 52.11, that's true, but today it's $2,900 and something. Normally the best discount I can give would take you to 4,600. But if you want to trade with SunnyBands, now's the time to do it. All of my indicators were programmed by me, developed for use in my own trading. I didn't program them for you. I didn't program them to sell. I programmed them because I needed it in my own trading. And I do make them available to you. And I'll show you exactly how I use them. I don't keep any secrets. I don't hold back on anything. I don't have special indicators that I use that I don't sell. So I just show you everything the way I use it. I don't hold anything back. And I teach you to use them for free. So if you buy them, or even if you just get a free 7-day trial, then I'll give you 2 Zoom calls. One of them will install the indicators, and in the other Zoom call, we watch the market live. Text me free trial, and I'll be sure to get that set up for you. 760-908-3070. And I work 12 hours every day, including weekends, so you can call me. Daily subscription to TAWS is $3.95 a month. And on Wednesdays, I'll let you in for free. Just text me Guest Pass or TAWS, either one. Yeah, it's probably better just text TAWS, TAWS. Good until July 31st. And here's my phone number one more time. Don't say you didn't know how to get a hold of me. Oh, I also have free membership on Money Mentor, so you can get to the members only pages. So all you have to do is fill out the form there under membership. So last year we made 482%, almost, well, $60,000. That's pretty good, starting with 5 contracts, 60 grand in a year. I took 1 week vacation, so we traded for 1 hour every morning for 51 weeks. Subscribe for daily attendance, if you would, please. I could use some more entertainment. I like it when people come in and watch me trade. The first year when I was doing it, I was so nervous that there were people watching me that I would clutch. But after about a week of that, I was fine. And I've been doing it ever since. There's the chart again. Are there any questions? David, I don't have the chat up. Can you tell me if there are any questions?
Yeah, let's see. Someone says they love the 20 and 200 moving averages.
Mm-hmm.
Um,
20, 50, and 200 is usually what the industry standard is. That's what most people watch. And you can see the market turn on those 3 averages over and over again. So I see why you love them.
okay. Yeah, that's all. Um,
Okay. Then no questions. Let's go to the last slide. Thanks for your attendance. I enjoyed talking with you and I love to visit, so please give me a call. Again, here's my contact information. Sunny@moneymentor.com or 760-908-3070. Thank you so much, David.